What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be talking about your favorite stock once again. That is the Sofi stock. There is a lot of great information we're going to be talking about today, and it's going to be a very exciting video. And today, the market is very, very red. We are bleeding red all over the place. These are the buying opportunities, guys, on that fear. And now we have more fear on the coronavirus itself. These are opportunities you want to take advantage of because these headlines are not reflecting a company's fundamentals and performances. We're going to be taking a look at the SoFi stock. We're going to see if it's a good buy today, and we're going to be doing a lot of comparisons with other companies' valuations. And only if you feel this video gives you a better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. Guys, I'm a man of my word. If this video gets 300 likes, I will do a double upload one of the days this week, and I rarely do a double upload. So if you're really liking the content, be sure to like this video, and I will be doing a double upload. Before we really look into the SoFi stock, we have to take a look at these indexes above because it is very important what's going on right now. We can see the S&P 500 is down 2% right now, and the Dow Jones is down 2.57%. I mean, anything down 3% in an index is like catastrophic. Like literally like the world is ending when you get to those 3% drops. The Nasdaq doing a little bit better and the Russell decent, but man, the Dow is really getting smacked. I've been telling people I feel like the hedge funds have really been milking these old timer stocks, pushing them to all-time highs in 5-10 years. And that's really what we're seeing, with the Dow and the S&P. And the thing is, the media really wants these to correct 10%, a 10% sell-off to say that they were right, to get the, stock market bubble headlines, to go away. So there's still a good chance, these could fall, the rest of the month. That's what they want. The media wants 10% corrections. I really don't care because I'm not really invested in the Dow Jones and the S&P 500. They really don't interest me. I'm more into that high growth potential stocks with undervalued market caps that have potential to just smoke and dust the S&P 500 and Dow. And that's exactly why we're talking about SoFi Technologies right now. So guys, specifically on SoFi, I want to look at that 5-day chart once again. We can see that the stock hit a 1539 and then bounced really hard last week to like 1630. And then we sold off even harder. And I believe this morning we were touching pre-market. We were down huge because, there was so much fear in the market this morning, with these COVID headlines and stuff. The stock was about 1470. And then if we look at the 1-day chart, it actually bounced all the way up to 1550. So it looks like we're getting very close to bottoming right around 14, 15 right now. We've had two bounces the last week, to 15 to 16 and then 1470 to 15 and a half. So no one really knows what's going to happen. You could be an expert chart analysis. No one's going to guarantee any price action on this stock. The biggest thing that's going to reflect the chart movement is more of news, earnings, headlines that come out. And right now, we have not had any headlines for over 5 weeks. This selling pressure, guys, is exhausted right now. I'm telling you, this stock can surge at any moment. Literally in the blink of an eye, 1 week, this thing could easily reverse to $20 plus. And of course, the new headline for this week, because we know the media loves to stir it up, loves to run with different fear tactics. 1 week it's CNBC, 1 week it's CNN. Dow sinks more than 900 points as Delta variant fear hit Wall Street hard. So now we're back to the coronavirus after, 6 months of being calm on the coronavirus. Now we're reversing from inflation back to the coronavirus. And in my personal opinion, these are all buying opportunities, okay? The Dow Jones you can see here is really smacking companies that people pumped up, without justification, and we're just FOMOing, fear of missing out. And as we can see, that's Carnival, the airlines, that's the stocks that were being pumped out of this world, Norwegian Cruise Line. So people were jumping the gun, before these companies even really, we're even coming back to full capacity, bookings picking up and stuff like that. So these companies were really being, jumped on that reopening play. The same thing that happened with the Dow Jones and the S&P 500. People were speculating on reopening plays before the companies could prove their business models were back. So I definitely avoided those. I don't FOMO, guys. I buy the fear. I buy companies that are not performing well. I only buy the red. And that's exactly what I did. I've been buying the dip on the SoFi stock. I picked up some more shares around, 15 bucks, 15.20 or something like that. So I pushed my average down a little. I think my average is in the 17s. I'm really happy on that average. Nobody can time the bottom. I was buying SoFi stock, 2 months ago and stuff like that. So no one can time the bottom exactly. What you want to be doing is, buying the dip, when you can. I recommend buying either, once a week or once every 2 weeks. Pick a specific day where the market is really performing bad, a very red day, and just buy the dip, 1 week every 2 weeks. Just buy the dip every 7 to 14 days. We also know that the valuation on the 2021 revenue on SoFi is at 12x right now, guys. 12x. Let me show you why that 12x valuation is very important. And it's going to come back to really save your butt when the market gets frothy. This is going to save your butt, this valuation, when we compare it to these other IPO ripoffs that are happening right before your eyes. Guys, Robinhood is going public, I believe, in the next 10 days. Robinhood is aiming for a 35 billion valuation, guys. This is what happens with these IPOs. This is the ripoffs that happen each and every time these IPOs go public. The big money, the people that were investing in Robinhood privately 5, 10 years ago, they're trying to cash out, and they are going to cash out massively on retail's heads. I will not be taking part of this IPO. Kathy Woods made the exact same mistake with the Coinbase IPO. That stock was trading at $420 plus. She bought it massively at the very top. She bought it at $350. She bought it at $300, $250. Now the stock is down to like $220. We can see here that the Robinhood IPO is looking for $38 to $42 a share. Remember, guys, this 12 billion market cap on SoFi, and SoFi, offers tons and tons of more different business variations than Robinhood. What does Robinhood really do besides, be a brokerage and offer stocks and options? I mean, they don't really bring a lot to the table to be at a triple valuation of the SoFi stock in this type of market right now. I believe Robinhood has around 830 million outstanding shares. So if we put that $42 price target, this market capitalization should come to right around 35 billion market cap, I believe. Yep, look at that, guys, perfectly. So we know the outstanding shares on the Robinhood IPO around 830. So they're looking for a 34 billion market cap. And don't be surprised if this thing surges to 45 billion in the first week of trading. It's very possible. That's going to put you at a 4 times under market value compared to Robinhood right now with the SoFi stock at 12 billion market cap. Guys, these companies have the exact same revenue right now. SoFi Technologies enter oversold territory. Guys, this article was put out on the NASDAQ stock exchange back on Friday, guys, back on Friday, hitting an RSI level of 29.9. Anytime RSI, drops below the 30 range, it is considered oversold. Changing hands as low as 1543 last week. The current RSI of the S&P 500 ETF was at 59.6. I keep explaining in little points in my videos that these hedge funds and, Wall Street big money has been milking the S&P 500 to prices out of this world, guys. A 59 RSI, that's the relative strength index. That just means it's being pumped out of this world, guys. So that's another reason why SoFi's down 0.3% right now, guys. And these indexes are getting smacked out of this world. 2%, 2.5%. That is insane, guys. If you see anything dropping 3% in an index, the world must be ending or something. And then once again, the Russell index has been, selling off for weeks. I believe this is down 7 or 8%. That's the small caps. I believe you should be in small caps right now because big caps have just been pushed to like fairy tale land, guys. And big money is really paying the price today. They are paying the price today. We're doing so much better than, these indexes. So that's all I can really say. Another website I like to use is Fintel. Fintel is going to show you the short volume ratio. This is, the percentage, of shares being shorted. They want to drive the price down. Now, guys, short interest, we have to talk about this, guys. This is a very, very important topic because it is misunderstood, especially in retail investors these days, guys. Wall Street Bets in specific will target any company regardless of fundamentals if it has a high short interest. Short interest sometimes is a great reason to keep a company in check of its valuation, okay? It will pretty much pin the stock down from reaching, new all-time highs that aren't justifiable. And sometimes smart money that own a stock will even short their own stock, because the valuation just got out of control. But we had, a lot of retail investors these days targeting the most heavily shorted names. That's all we were searching for. Short float, this float is, 50 million, tiny float, short interest out of this world. That is not a good investing tactic to keep you alive for 5, 10 years, keeping your money and equity growing. That is a very big reason to get burned. Sometimes those companies are being shorted for a good reason because the valuation is not justifiable. We've seen in tons and tons of meme stocks, but right now, SoFi is being shorted 30%. Guys, this is a massive short interest, okay? Regular is like 10%, okay? We now have 80% upside on the SoFi stock, according to two Wall Street analysts, which I believe is going to be up to 4 or 5 after these earnings come out in the next three weeks or so. So, guys, 80% upside. This is your cushion. This is your protection, okay? This is your buy the dip opportunity on fear. This is where it doesn't really matter if you time the bottom because you're already getting 80% upside from the fair market value of this stock, okay? So this is short interest that I believe is because big money is trying to shake out as much retail investors because they want to own this one. They want this company. Wall Street is telling you to buy this stock, okay? We all know that AMC was the most shorted stock, in the market, okay? Was it justifiable how much of a short interest it had? Absolutely not. But it definitely should have been shorted compared to its business model and where the company is headed and the direction that it's headed, okay? AMC has, declining business, declining revenue for the past couple of years. The stock has pretty much peaked because, of the streaming services. They are, battling AMC. Now movies are being offered on HBO Max, and Wall Street has 8 analysts covering this stock. So the short interest was for a reason because of the business model, because of the fundamentals. We don't, retail investors did not care. And, this stock is surged to all-time highs of 60, $70. And now some people are paying the price because the stock is falling, down 50%, back down to 30. So this has 82% downside. So guys, this is different short interest, okay? It's going off a business model. That's usually where the short interest comes from. Over short can be a reason why companies are trying to bring this stock down, as we're seeing in SoFi stock. Wall Street is recommending this stock 80% upside compared to 80% downside. So be sure to do your research and check out the company's fundamentals, okay? There's always a time to buy these stocks, with a trade at all-time lows when it's $5, $10. But you don't buy at all-time highs of $40, $50, $60. There was YouTubers saying this was going to go to $100,000. A lot of people don't know what's going on inside of the market, and a lot of these YouTubes are really going to take a big hit from pumping out 50, 100, 200 YouTube videos on AMC stock. I'm not going to do that to you guys. On my YouTube channel, you're not going to see any Dogecoin, any AMC, any GameStop. I'm looking for fundamentals, guys, and I just want you to know that. Once again, another stock that has just been pumped to fairy tale land. People just don't understand when to quit, okay? Moderna is a great company, okay? It's been a big part of the, coronavirus, pandemic, but people just milk it and milk it and milk it. This now has 34% downside. People don't know when to look at the fundamentals and listen to Wall Street. 13 analysts are covering the stock with almost 40% downside. Okay, this is retail, running in, FOMOing in later to the party. This continues to happen. Don't FOMO, guys. Know when to pull the brakes, know when to stop buying, know when to look for other plays. We on this channel, we buy undervalued companies according to Wall Street. We buy on red days. We do not buy, with downside risk of 30% and downside risk of 80%. We buy with amazing upside risk, okay? So that's what I'm preaching on this channel, and that's why this channel will do better than a lot of other YouTube channels over time. We're being very cautious of what we buy. We're looking into the future, but we're looking at fundamentals, guys, and this company has fundamentals with 60% year-over-year growth. Once again, guys, you can't beat this market cap, okay? We got earnings coming up, okay? The earnings should be a blowout. I believe the management team is very exciting. They're preaching about high-end guidance of the Q2 earnings. We got the Super Bowl coming, guys, at the SoFi Stadium. What other SPAC stock can even afford an NFL stadium? Don't listen to CNBC and those bearish comments, bashing all of these SPAC stocks. There's some real legit companies that potentially could make it into the S&P 500 in the next couple of years. This is a SPAC stock, guys. They are in the NFL stadiums now, guys. This is what SPAC stocks are doing. Don't be surprised if there's another SPAC stock to take over a professional, sports team, guys. This is happening right now. You need to take advantage. This is real life companies, guys, with real fundamentals. This is what's happening. SPAC stocks are opportunity for the retail traders. They're not those IPO scams, like a Snowflake, like a Coinbase, like a Uber, like a Robinhood. You're getting fair market valuation with crazy upside potential for your company to grow into slowly. You're not getting maxed out for big money to cash out on your head, okay? This is what I like about the SPAC stock world. There is so much opportunity in the SPAC stocks, as we can see here. I really hope you guys enjoyed this video. I do other more in-depth analysis on the SoFi stock, especially in these last two videos. So be sure to take a look at those videos if you wanted to learn more about SoFi and their business model. Once again, if you feel this video gave you any better information on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming on. You don't want to miss it. I hope you have a great day.